flows if the currency that you generate the cash flows are collapses in value? So I think here's the big idea, really big idea. Everybody in the world has to decide where they're going to locate their family. They have to physically, they have to decide where they're going to locate their themselves in cyberspace, their mind. Are you going to watch Facebook all day long? Are you going to read Twitter? Are you going to be on YouTube? You're going to go to Rumble? Are you going to look at Instagram? Right? Where is your mind? Right? And then the third question is, where is your business? Are you going to run a yoga studio in Miami? How about a yoga studio in New York? How about, are you going to run a farm in Zimbabwe, a ranch in Argentina? Are you going to buy a company that has business interest in China? How about owning a bunch of businesses in Ukraine or Russia? Right. So where is your P&L? Right. And the fourth big idea is, where is your balance sheet? Okay, you're a podcaster on YouTube. Okay, well, you better make sure that you comply with YouTube platform requirements. Otherwise, they turn off your podcast and they crimp your business. That's where you generate your revenue and you generate your cost. But now we started pouring gasoline on that flame, right? The gasoline in the U.S. is we triple the inflation rate, triple it, monetary inflation. But forget about that. Maybe you're a blue blood living on the Upper East Side with a trust fund and you just don't see why you need it. The gasoline in Sri Lanka is everybody lost everything overnight. The gasoline in Lebanon is the bank freezes their doors and you lose all your money. The gasoline in Argentina is the peso goes from 20 pesos to the dollar to 280 pesos to the dollar in 4 years. Right. The gasoline in Ukraine is oops, there's a war. Banks are, there's a limit to how much money you can withdraw. And the gasoline in Russia is, okay, I get, the stuff you thought you owned in Europe, you don't own that anymore. We're taking that from you, taking your gold, taking your bonds, taking your yachts, taking your villas. So there's a lot of people with a 2x4 to the head, and they're all stunned and they're all trying to figure it out. And there's this colorful debate, a political debate, a media debate, a debate on YouTube, a debate on Twitter. What's the solution? And the only thing we can all agree on is we probably need to look at some new ideas, and Bitcoin hammered. But on the other hand, tangible assets, oil, natural gas, food, any type of energy, they're all shooting up. Right. And I think people are going through this moment where they're like, I guess I'm going to freeze to death or starve to death unless I have some of that tangible commodity stuff. And the financial stuff, I guess I'll trade it. And meanwhile, the politicians, they play with the little knobs, attempting to do good. And it turns out that it's very difficult for humanity, for any human being, to actually make adjustments fast enough and intricately enough so that they can do good without probably doing more harm than good. And that's where we find ourselves right now.
Yeah. And I grew up on the U.S. yield curve, because when I went from MIT, where we both graduated, I went straight to Wall Street and I was trading fixed income derivatives. So I grew up on 3%.
Paying that much attention to. I think that if you live, I did have a business in Argentina, and I watched a currency collapse in Argentina where we lost nearly everything. Like, we lost all of our profits for a decade. And overnight, we had all our money in a bank, and it was in dollars. It was an American bank in Argentina.
Really?
And the American bank sealed itself. The government sent an edict to the bank. The bank converted our dollars into pesos at $1 per peso. And then the next day devalued the peso 10 for 1. And we lost 90% of our money in one day. And in an American bank holding in dollars. And luckily for us, it was a small part of our business. So it's kind of like someone just chopped one of your fingers off, but they didn't chop your head off. Now, if you'd lived in Argentina and you had 100% of your business or your assets in Argentina on that same day, you didn't, lose 1%, you lost 90% of everything. So I kind of knew intellectually that this could be useful, but it wasn't a visceral. At a 15% monetary inflation rate means that you lose 75 million a year on your balance sheet. And the best I could hope for is 2,000 people working themselves to death, doing 100,000 things right every year, everywhere in the world. And if we didn't screw up anything, and if everybody worked themselves to the bone, we could make 75 million.
Right.
So I had this inflection point where I realized everything we're going to do for the rest of our lives is going to be negated by the inflation on our balance sheet. And that's the point of hope, despair, and indifference, where you're like, it just doesn't matter what we do for the next decade because we can't get ahead. Now, that's a slow death, right? I've used the phrase, right? The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Just a road to serfdom. That's a slow death. But if you took yourself and you dropped yourself into Venezuela or Zimbabwe, and I just told you, or Argentina, it's the same idea. You get surrounded, you're going to get starved out, choked out. They'll cut off your water supply, right? There's no way you're going to win unless you make a stand. So we decided that rather than the slow or the fast death, we would go and do something and take a risk. And it's a very intricate story, which is probably beyond the scope of this, but the short of it is about 10 different transactions, a Bitcoin, a share buyback, a Dutch auction, equity raises, junk bond, convertible bonds, lots of communication to the street. And we went from investing 250 million in Bitcoin to 425 million in Bitcoin to eventually $1 billion in Bitcoin, to $2 billion in Bitcoin, to just slightly less than $4 billion in Bitcoin. And the result I just said, right, for our shareholders, our stock outperformed every big tech company, every asset class, and every enterprise software company. I think we did the number and we calculated we outperformed 485 of the 500 S&P companies over that time period. And then in terms of the corporation itself, we added. Now we've been pretty artful about this. For example, the first 425 million, almost the first 500 million was equity, and then the next 500 million, or the next 1.7 billion was convertible debt, but it was converting into equity, and it's unsecured debt, so it's not related to the Bitcoin. It just becomes equity at some point in the future. And then the next 500 million was a junk bond, but that was secured against the cash flows of the software business, which is very stable. That can be refinanced in the future. And it was a 7-year junk bond. So again, not really correlated to Bitcoin. And then the next billion was an ATM equity issuance. We issued $1 billion of stock. So you see, we've issued a lot of equity, and then we've financed other parts of the business. It was only the last 205 million where we pledged some Bitcoin as collateral. So that's our famous Bitcoin-backed loan, or Bitcoin-backed, loan facility with Silvergate. And we calculated that when we did that, we were 20x over collateralized. Like we had 20 times. I think generally for us, we've adopted a very simple strategy. We keep enough working capital to last us a year, normally in the range of about $50 million in US dollars. And then when we have excess cash, either from operating income or any other financing opportunity, we put that into our treasury reserve asset. And we have adopted Bitcoin as our primary treasury reserve asset. So we're 100% treasury reserves in Bitcoin. You might decide that you're going to split your treasury reserves 1/3 property, 1/3 art, 1/3 Bitcoin, or 1/3 S&P stocks or something, right? It's a preference for an individual or an investor. But of course, our company, MicroStrategy, has adopted a Bitcoin strategy, and we have transparently communicated that to all of our outside shareholders, and that is in our 10K filing. So when someone buys